Hey, we are going live on YouTube. Let's go. Trying something new today. We are going to go through a couple things. Screeners, also selling puts. Today, I'm going to break down how I went through my first selling options trade. So I'm plant-based vibe, vegan dude that loves talking about stocks. I also teach people how to use barchart.com. So what I want to do is actually go through a trade here. First, we actually posted this on our Instagram account, and somebody said, "Why would you sell options? The volatility is not high, and the premiums are much lower." And they were right. But I read through this article and I was just like, okay, you sell this option. Now, I've been learning a lot about selling options because when I'm teaching people on how to use screeners, a lot of times they're doing the wheel strategy. So they're trying to understand, how do they use the naked put screener as well as some of the additional screeners right here under the options tab. So they'll use the will strategy, come in and sell these naked puts or cash secured puts and collect income. And then if they ever basically, in worst case scenario, your shares get called, they turn around and then they sell covered calls on the shares that they're holding, right? So if you're already holding 100 shares, you sell covered calls. If you don't own the stock, but you want to buy it at a discount, right? It said how to buy NVIDIA stock for a 27% discount or achieve an 8% annual return. And I said, wow, I mean, and even how had they phrased buying or selling options was it was essentially like setting a limit order and you collect an income while you wait to buy a stock. So in this example here, it was like you sell this 145 put and you collect a 750 premium. So you're collecting $750 in premium, right? So long as this option goes worthless. All this trade needed was that Nvidia didn't need to drop below 189 by expiration for this particular trade example that they were going through. So I decided, I said, hey, well, let's go look at a trade. Now, at the time of this article, it was April 14th. I put a vertical line here so you can see that the price was beginning to break out. So price was now above 190. Now, RSI was relatively high. I'm not a type of person that likes to chase trades when RSI gets a little higher, but I started to notice that we were seeing a breakout here, especially we got a large green candle breaking out over this clear resistance level here. So we're breaking out of this consolidation essentially, and we're going towards a target of 200. So my idea is, hey, at least I could trade this into 200. So as price was breaking out, by the time I got to this trade, let's say we're over 195. So I open up if you come over here on any stock, in this example, we're looking at NVIDIA, which was my trade. You can come in here and look at naked puts. Now, at the time, I had noticed on videos that we have teaching about selling puts, you usually want to go for about 30 to 45 days in expiration. So this was a month ago. Okay. So at that time, I was looking at the 5/15 expiration. And at that time, 180, 190, 195 were all here. NVIDIA has gone over 210 now. Okay. NVIDIA has hit a new high. So we're talking about prices from in the past. Now, the cool thing is here, I also have these trades in my portfolio that I linked onto bar chart. So if we come here, if we click on this margin account that I've connected here, you can see the trades that I made. Now, this was the first time I made that I created this account so that I could show people how you can manage your portfolio in bar chart, which is actually pretty cool because you can also all the tools that you have, screener and everything. I can screen my portfolio. Everything is in here. But in this case, we're looking at closed position. So let's go back to the portfolio. And you can see the performance here on this particular trade. So I sold initially the 515 May 5/15 195 put. Okay. Now I was like, Ray, that's a little risky. You're new at trading options here, and the price was beginning to pull back. So let's actually open up this chart here. So that's the cool thing about having this here. I can open up the options quotes page. Let's pull this up and let's go to the interactive chart here for this particular option that I bought. Now, going back to one, let's see, around April, I remember I opened it up right around $5 premium. Okay, so I was collecting about, let's say, close to $5 in premium. Okay, so $500 was what I was going to collect in premium by entering this trade. Now, mind you, what I learned was that as the option increased in value, you could actually lose on this trade too. Now, that was something that I learned when entering this. So as it went back higher, I was actually losing a little bit. So it dropped lower, okay? And then it went higher just a little bit. So I said, hey, let me get out of this trade. Let me figure this out. Maybe that guy was right when they commented that now wasn't a good time, okay? So I got out of this trade, and you can see that here in my investor portfolio. I took that profit at around 3%. Okay, so I got out of that trade, but then I said maybe I can find something a little safer. I went back to the Naked Puts screener for the Nvidia, and I noticed that it also had, maybe we can go for June expiration in the 180. So I can give myself a little more price range and also a further expiration. Now, the option premium is going to move a little slower, but I am buying myself more time and I'm collecting a little less. Actually, I think the premiums were about the same. We can actually open up this chart here. So let's pull this up. We'll pull up the interactive chart so you can actually see. It was about the same thing. So I was like, man, this just seems like for the same premium, because remember, I got out of the other option around this, and I was like, man, I could actually switch that over, get right back into the trade, buying myself more time with the June expiration, and then a lower strike price. Now, by entering this trade, let me explain this. I am going to collect about 470, $4.70, which is times 100 shares in this particular contract. So I'm going to collect a $467 premium, right? But my biggest risk here, now I'm going to collect that premium. Most options are going to expire worthless. So if you trade options, 90% of option buyers are going to lose. Most of these contracts are expiring worthless. They're all on a hell-bent bound, excuse my language, to being worthless, right? And we've all been there. If you've ever traded options, you've always experienced that option going worthless. And I always thought to myself, there's got to be another side of this market, and it's in selling options. So in selling this option, I'm saying that so long as NVIDIA does not hit 180, this thing is going to go to worthless and I'll collect that premium. Right now, that person was right. When volatility was higher and the premiums were higher, obviously I could have collected more premium. But at the same time, you have to ask yourself, do I want to buy the stock or make this trade? It's really for people that are, it's money sitting on the side and you're saying that maybe this isn't the bottom, but you still want to, like I said, it's a limit order saying that I'm willing to buy 100 shares of Nvidia at 180, and if we don't go there, I'll collect $400 in premium, $467 in this case. Now, Nvidia, sure enough, did not drop down here. Okay, so if we actually look at Nvidia's chart, let's actually pull up Nvidia and look at the chart here. Actually, let's do it next to the option. So this was my option. Let's pull it up right here. So we'll actually pull it up side by side so we can see it, and I'll put it in the new pane, actual values. So you can see here. So as NVIDIA, this is when, and I'll show you what made me get back into this trade because I did take profits on, I mean, hey, I won on this particular trade. It wasn't much, but I took this profit here and then I opened up the next trade that gave me more time and more price. Now, why would I enter that trade after price was pulling back and potentially going lower? Well, there was a couple of things I looked at, and Barchart had great tools because even in this portfolio, I can literally pull up particular technical tools or anything like that. So with NVIDIA being in here, it still had its buy signal here. So I was like, this trend was still intact. So I was like, let me dive deeper. So as we went deeper into NVIDIA here, I pulled up the gamma exposure. Now, one thing I check first is the put call ratio because I want to know that other people that are in the options market are in my favor and how are they positioned. Okay, so when doing that, I come and look at the open interest. So I can see that this was the open interest was shifting lower on the put to call ratio, meaning that there were going to be more calls than puts. Okay, because as this number moves higher, that means that the puts on top of this ratio are getting higher or the calls are getting lower, right? Whatever this is, the lower it gets, there's more calls than puts, and the higher it is, the more puts there are than calls. So as this number moved lower, I knew that the market was positioning for more calls. So I was like, okay, well, I don't mind selling some puts for people that want to bet against this, right? Now, where is the market going to hold? Where should price hold anyway? I come to gamma exposure for that. Now, I can adjust these expiration dates. I can include more or less of them. In this case, I'm opening up the strikes so we can see more of these strikes. And when we pulled it up, I noticed the gamma flip was way lower, right? So price was hovering around 190 at the time and pushing above 200. And so I was thinking if the gamma flip, if negative gamma is way down here, NVIDIA has so much price to fall through. I mean, it even had a large gamma spike here at 195 and another one at 190, and I'm holding a 180 strike, right? Worst case scenario on this trade, I buy 100 shares of NVIDIA at 180. I'm not mad about that. Okay. That's worst case scenario. Best case scenario out of that, I turn around in the wheel strategy and sell cover calls. Let's say the price did fall down here. Turn around and sell 200 strike calls, sell 210. And so long as NVIDIA doesn't go above these particular levels, I can collect income at each one of these strikes, whichever one you want to pick, depending on how much premium you're going to pull out of this particular trade. And let's say NVIDIA did hit my 200 strike. I bought the shares at 180. That's $20 per share that I can gain. So selling options is I love this. I've found a new hobby here. And I'm quite successful at it. It is my first trade. I got a little afraid in the first one. So if you like I said, I connected my portfolio here and I made these trades so people can kind of see how you use the investor portfolio to manage trades. Like I can look at open positions, closed positions, but in this case, I did watch a video recently. I've learned a lot from Rick Orford. I think that's his name, Rick. But Rick has a lot of videos on bar chart and he teaches people how to trade options. And I've been watching his videos, and one of them was like, hey, remember, you don't have to hold this to expiration. If you're up, you can close out the trade, buy it back to open, and then take profits, right? So I took profits on my 180. But even in the case of this, like I said, if we were to pull this back up, this thing is going to expire worthless. I mean, I could have collected even more premium because, like I said, I opened this at the 4. And you can see here that now it's only 150. I got a nice little trade out of that. Now, the other one, this one is actually quite worthless because it had way less time. It was a little riskier because I would be forced to buy 100 shares at 195 with far less time. So this was a riskier trade, but this one's down to 15 cents. So for the first selection of selling options, I did pretty good. Thanks to Bar Chart. Thanks to who wrote this article? Who was that? Thanks to Gavin. Gavin. Gavin, this guy, incredible guy. If you actually come on, if you go to the Learn tab and go to the archives here, Gavin actually has, I don't know if you can actually search by name. Let's see. But yeah, Gavin, I learned a lot from Gavin. I think Gavin is who helped me wrap my mind around like maybe the wheel strategy is in here. Yeah, understanding the wheel right here. But Gavin also has a lot of great videos here teaching you how to do these strategies. Like I said, Rick as well in here. A lot of great strategies. just helping people understand how to navigate selling options. Because at first, none of this made sense to me, but now it makes all the sense in the world. So hopefully it helps you all. But before I go, I do want to show you a couple of things, how to find different trades. Because I know a lot of people are like, how do you walk through buying or even selling options? Well, first, I want to start with a screener. I've built several different screeners. One in particular I like, and I always tell people about, is S&P 500 over Sol. This is just a great one because S&P 500, large and mega cap, these are companies that institutions and hedge funds are going to be buying every month. I don't have to question that, right? I don't have to ask, is somebody going to be buying this? Index funds are buying this, right? So I'm looking for stocks that are trading lower in that. And the best way for me to do that is RSI, just in the simplest form, to not confuse people, keeping it just simple, stupid here. 45 lets me know it's either going lower or coming back from it, right? And I can find that out when I look low up, dive deeper into these charts. Now I've added a couple different indicators here as columns. So when we look at this, I can gauge a few things here. I can sort this by volume to see the most active. I can sort it by relative strength to see who's actually coming back from this, because these are higher up on that 45, right? And then who's lower, who's in the dirt, right? These are obviously stocks that have they're in the dirt, right? But if I look at this and they're coming back, you can see that the closer they are to this, there are some signals that could be changing here, right? And then I can see where are they in relevance to their moving averages, whether it's the 20, the 100-day, the 200-day. These are all major things because this 20-day will let me know where's the short-term trend, and their 200 and their 100-day will let me know where are they in the long-term perspective. Because this is for investors, people looking for buy the dip opportunities. And if we sort this by market cap, this is going to tell me the biggest names here, right? And now, when I dive deeper into this, let's say I want to actually show you something that might be high in volatility. So let's actually take a look at, let's go back to this. Let's look at volume. Let's look at Palantir. I believe Palantir could have a lot of volatility. So if we go to the options dashboard, volatility is actually low. So this is saying that options are cheaper, right? So if you want to sell options here, you're getting cheaper premiums. But let's say you thought that NVIDIA or Palantir in this case is going to move higher and you wanted to sell options on this. You look at the naked put here. Actually, too, looking back at this options dashboard, let's go back to that. This is going to tell me whether option premiums are higher or lower, right? So as volatility is low, you're paying cheaper as an option buyer, and as an option seller, you're not collecting as much premium, right? And the put call ratio we can also see here on the options dashboard. So what I can do here is knock off volume here, and we can see that looks like there are a little more people becoming a little more bearish here when it comes to open interest. And that's as price just continues to move a little lower. It looks like price is getting weaker here. So let's say you are bullish here and you maybe want to go out for June expirations. You can see here how the naked put screener shows you these particular trades. So if you're bullish in this case, this is not a trade idea. I'm not bullish on Palantir. I don't own Palantir. I don't trade Palantir. I'm just not interested in the stock. But if this was something you were bullish on, you would sell a particular option here. Now, what we're looking for is sometimes I may look at the open interest to find out where are the traders here. And we can see that there's a lot of people open interest in the 120, prices at 136. So if you were to sell this, let's say you sold the 130 for a higher premium, right? So the next highest open interest is this 130. So in the case of selling this particular option here, so let me move this over to the side. So in selling this option, you would have to essentially buy 100 shares of Palantir at this 130 strike, okay, if Palantir fell back to 130. But so long as Palantir stayed above 130 by expiration, you will then collect this 515 premium. Okay, so you're selling the 130, you collect the 515 premium. So you can see the credit here is 515. The debit here is the cost of you having to buy those shares less the premium collected. Okay, so does that make sense? Like you all are get like by collecting this premium, it's a bit of like an insurance, right? You're selling somebody this option, you collect the premium so long as this stays above, Palantir stays above 130, you will now collect this 515 in premium here, right? So this is just a few ways that you can use it. I love a lot of these tools here on the options dashboard. It's going to tell you the trend. Obviously, because the stock is falling, the trend is bearish, but you want to start seeing when these indicators start to turn. Okay. Expected move can tell you how option traders are positioning by expiration. So if you're looking to sell, like let's say for the June expiration here, we can see that price could potentially go to our um, our our particular strike price in this case. So if it were to fall to that strike price, you would have to then buy Palantir shares at 130. Okay. So using this kind of tells you realistically these expectations that you can expect as well. And then one last thing, like I said, I always check the gamma exposure here to tell me how institutional traders are positioned, right? So the price is right on the line here. Okay, so our gamma flip is at 136 and price is trading at 136.89. So Palantir is trading on the line. Okay. So in this case, if I go for the 130 strike, I would be right at where price may hold, right? Like if price breaks through the 136, maybe traders in the market will push and accelerate past 135. We get a little bit of more turbulence at 136, 132, but then we start to slow at 130, right? And that's where that particular strike is. So long as price doesn't fall below there, you'll still be collecting that 500 in premium. So um, selling options is interesting, but like I said, you really have to sell them on stocks you're willing to buy because the biggest risk in this trade is sure I collect a 500 premium so long as price stays above that by expiration because the contract will expire worthless. But if price falls down here, I could then accept the losses if price continues to fall. Let's say it hits this gamma level here and then accelerates even more to 125. I will then be taking on losses by holding 100 shares, right? So there is a risk in that because you do need to understand your risk here is buying 100 shares of a stock at that particular strike. But so far, we're successful selling options. So I'm excited. I love what we've got so far. It's been fun. Like I said, I got into this first one. It was a little tight, but even this particular option is going to be expiring worthless, and this one is well on its way as well. But we took our profits and out of this trade. Another successful day in the market. Bar chart always offering opportunities here. I love coming here, checking the home page to see what's trending in the news. If you don't see some tickers that, don't really speak to you, just go over here to the news page and you can scroll for days, right? And just see how different markets are moving from commodities to real estate. Another way that you can find key trades, I like checking this one as well. Some of these stock market sector pages are really great because this is how you really start to see the shifts in sectors, right? So if you look over a 3 month trend here, you can see that healthcare has been lacking, but maybe there's a chance that there's opportunities there, right? Because if we look on the short term in the 1 month, um, is healthcare is still lacking. So it ain't making a comeback, but maybe in the last 5 days. Has healthcare done anything? Absolutely not. So there's no opportunities there in healthcare. But let's say 6 months. What's been lacking? Financials, utilities, and consumer discretionaries were the losers over the last 6 months. But let's see if any of those names pop up maybe in the last month. So financials, utilities, consumer discretionary. So we can see here consumer discretionaries may be making a comeback, right? And then you can dive deeper into these particular sectors and say, where is that comeback? Is it automobiles? Is it, leisure equipment, whatever that is, hotels? So this is a great way to find shifts in, say, capital movement. Uh, this is, I mean, really great. And then if you even look into, say, market momentum pages, you can get an idea of this as well on the bigger scheme of things in terms of, is the market advancing or is it pulling back, right? So we can see that 62% of stocks were declining, meaning the market breadth is weak. And that's why I can see that, right? Some stocks may be advancing, but for the most part, under the hood, we can see weakness here. You can see how that breaks down as well here. Now, another thing is market performance. This is another way that you can kind of see those sector rotations or those capital rotations into different industries and sectors. Um, just by seeing it on this chart here, you can see the differences. We've got the S&P in the black here, so you can see where the market is and what sectors are outperforming the market, right? So you can see info and tech is outperforming. We can see consumer communication services is outperforming as well. And then at one point, what was this one? This is energy. Everything went down and energy went up. So even seeing these types of correlations, we can see where the market has these interesting relationships because this was around the time that obviously the Iran conflict started, Strait of Hormuz. So as markets decline, we can see that energy went the opposite way, and it had already been building a trend before that. So it had already gave traders a head up that, hey, we're moving. I mean, even let's you can remove all of these and just look at energy. So we can see because let's look at tech so it'll see the sharpness of the decline. So we can see the black here is the market. We can see that as tech and the market moves sideways, energy was really starting to pick up steam, right? I mean, and that's another thing that we can see when we're looking at things like this, right? Because you can see that increase over time. So we can see that on the short term, let's see here, utilities is starting to see weakness, but for the long term, they're still holding up their long-term trends. So these are types of things that we can sort of analyze based on moving averages and these different indexes. But going back to this, you can see here that energy had been building up steam as the market was going sideways. And then as the war began, market declined and energy really got its chance to shine. So people act like the energy trade came out of something like nowhere. It had been waiting to shine. Like even when we go back to stock market sector performance and we go back to like say year to date, energy's energy's been on a run, right? Even looking at 6 months here, energy energy isn't new to this. It's been running, right? So, like I said, you can also use this to find opportunities because obviously, if we look over the year, tech has outperformed. Okay. But what are some places where we can find maybe some weakness? Consumer staples, right? Real estate, utilities, maybe things that were weak over the last year, but they could get their shine as people maybe rotate out of tech. So these are just some great ways to utilize the tools on bar chart, different pages, tons of ideas here. They've added new screeners here, RSI divergences. So these are also great. I love the candlestick patterns, the bearish, bullish moving averages, also themes here, insider trading, politicians, set up your own screeners. So much. Guys, why are you trading in the dark? Why are you acting like you can't find these opportunities? There's millions of ways to get started right here. Then you can just refine these by building your own screener. Okay. I hope that helped. I'm not sure if anybody's even watching this on YouTube. Let's go check in on YouTube, see if anybody's watching. Uh, I don't know if anybody watches these. It is kind of the middle of the night for you all, but I wanted to come on here. Let's see, view the channel. Boom, boom, boom. Let's see if I got it. No, no, I mean, maybe some people are watching. One, I only got one person watching. Maybe that's me. But somebody will be watching this in the future. If you got any questions, make sure you drop them in the comments. Like I said, a lot of these videos as well, I've built long form videos here as quick tips. So if you come over here to the archives, if you go to like, I think the beginner videos, you might, yeah. So you can see how to connect your investor portfolio. A lot of those videos, you can just come on here and whatever quick tips are a lot of the videos that I've done for bar chart to just help people navigate the website. Okay. A lot of love and knowledge in these videos. Okay. Use them up. All right. And like I said, if you're a little more advanced, there are not going to be any quick tips on the advanced stuff. Okay. I'm not going into some crazy stuff. But if you are more advanced, there are other strategies in here for the advanced. If you're a little more intermediate, we got you. Also, different topics. If you want to learn about options, there's also an options learning center to walk you through different strategies. Okay. There's so much knowledge on bar charts websites. There's no excuses. Okay. You can come here, get free videos. Make sure you follow some on YouTube as well. A lot of great education here, a lot of other options education here. So you can learn about a lot of these strategies that I just talked about. So if you don't understand them, you can understand the naked put because as a naked put, I'm expecting a bullish outcome. I want price to stay above my strike price in order for me to collect that premium. Okay. My loss happens when the stock starts to fall below my strike. Okay. And you can watch a whole video on this. Okay. So it'll break all this down for you as well so you can understand where's the value in that, how to understand these particular trades, what are you looking for, and how to analyze all this data, and then exit in that trade so you can understand that you don't have to hold these things to expiration. If you want to exit the trade and take some profits, let's say the stock starts to move higher, premiums just dust on this thing, and you've collected it, go ahead and close that trade and take that profit and we move on to the next, right? So a lot of education here and it's totally free. Okay. I believe that's it. I believe I covered everything. Let me make sure I showed you my screener. Let me show you one more thing. This is a video we're about to release today, but I want to show you the bar chart top stock picks. Okay. Now, this is a stock, nice, quantum computing. Ah, interesting. Quantum stocks have been on the move here. This particular, when you're looking at this page, it's interesting because it will show you the 5-year signal game. So this particular signal that it's giving right here has performed at 750%, right? And we can look at the historical signals, right? I mean, this thing just happened to be calling it right. Quantum stocks have been moving. It called to buy here. This thing took off. You could have actually got more gain out of here if you're just looking at the charts and you're saying, hey, we might hit a top here. Let's take some profits. Selling wasn't that great, but this stock just outperformed every time it hit a buy. Selling was a great get out of here, throw the parachute, whatever profits you got, take them now, because this thing got toast. And then right now it's setting another buy signal. Crossover here, 20-day, 100-day moving average crossover on quantum computing, today's top stock pick. Okay. Now the market game for this particular stock has been 103%, but this particular signal has done 750%. Wow. We can also see several other stock picks. So you can come here and start your day here. We can see what are we looking at. Okay. I can sort this by I I can also screen this. So if I want, when I'm pulling this list, I can screen this. Now, I do want to show you a couple of things on this list before I click screen because that'll take me away from this. When I'm here, I can see the 5-year gain of this particular signal, but also the market gain, right? So you can see here, this particular signal has performed, has performed at 220%, while the market gain on this stock has been a loser, right? So we can see that this particular signal has told us the best times to get in and out of this particular stock, even if it is, oh, this is a 20-day moving average strategy. So this is a short term, really just swing trading. But you can see here, buy, sell, get out, buy, sell. And a lot of times people don't understand. Sometimes you can ride the 20-day moving average on some of these stocks, just riding short term trends. Crosses the moving average here, enter a trade, take some profits along the way, crosses below it, take the short. This is not financial advice, but sometimes you can, and you can back test this. So let's say we go into the details here. You'll be able to go into and see how this performed in the past. But not only that, if we go over to, let's say we want to look at quantum computing. If we go into quantum computing, we can then come here and say, hey, let's look into the trading strategies. And for this particular one, it is giving us the buy signal on the 20 and 100 day, right? So we can actually see the trade history for this trade, right? So we can see where's that win percentage coming from that we saw back on the today's top stock picks, but we can see where does it enter, where does it exit. It has a history of that, how this is performed over time, and then the hypothetical profit on 100 lot trades, right? So you can see that some of these are, let's see it like you can see that there was a max profit here, but the profit for the trade closed much lower because it was waiting on this signal. So a lot of times you may be able to take much more profit out of these, and this doesn't seem to have bad drawdowns. Worst drawdown was 301 back in 2021. So you will have some trades that lose. So if we go back to indicator strategies, you can see that some of these are losers. So actually the 2100 day is let's look back into this. Yeah, it's a loser. But okay, it just took some bad losses. This is a prime example how like losses over time can add up to just take away profits for you. So let's look at a winning one here. So the 20-day moving average was the most winning. Told you sometimes it's as simple as that. It's got a nice profit out of here. Let's see if it took some losses on some of these. Took some losses, but just the wins here outweighed the losses. The stock has some really strong moves here. But going back to this is how you back test some of these strategies if you want to look deeper into the history. But going back to the list, we can actually screen this list. So if we're looking at whether it's a difference in the market gain or the 5-year gain we're looking for, like how is this particular signal performed against the market, looking at that. And you can find a particular signal, or you can look at the win rate. Which one of these has won more trades than lost, right? So NetApp might be something you want to look at. This is not advice, right? But we can also screen this list, okay? So when we move into the screener, we now have this top stock picks list into our screener. So we can add things like volume. So add that, we'll say market cap. And let's do signals, overall buy whole signal, and then opinion. Let's do opinion percentage. And what else? RSI. Let's do RSI. Okay. So we have these and let's screen it. We got these 10 stocks. Now we can actually put them in order of which one's got the most volume, right? Which one's the biggest, or which one's trading in either an overbought situation or oversold, right? So it just allows you to some of these ones that are higher in the overbought, maybe it's some breakout types of trades like this Tesla bullish ETF, Canadian solar, and then some of these. And like I said, you can pull up the flip charts and actually pull up the chart. You can add your favorite indicators here. Let's go into templates. Let's say I want the crossover with the RSI. Actually, let's look at our put call ratio too. So I can put the put call ratio on here and the RSI. So I can see, hey, how are option traders trading it? So if we look at some of the ones that are overbought here, option traders are obviously buying more puts. as these become more overbought, right? And we can now this Tesla Bullish one looks like they're looking to kind of, hey, and this isn't necessarily too overbought, right? It's still got some room. This is a 2 times leveraged ETF, so sometimes it can push a little bit higher. And if Tesla's got momentum, it can push this higher. We got recovering moving averages here. And obviously, option traders are becoming a little more bullish. Definitely, the bears are getting out of the way here. Okay. So this is just how I go through trading. Now, I don't really do a lot of day trading, but I know a lot of people are always looking for trading opportunities. But using these indicators, this data on bar chart, a lot of these screeners that they have as well already set up for you. It's a great way to find stocks, even the new recommendations. I mean, you got buy and sell signals right here based on different strategies as well. And like I said, even when let's say we go under new buy signals, right? And then maybe we say we want to look at particular signals under this particular stock. We can go under here, go to top trade alerts and see, all right, we've got a sell signal on this particular one, but let's look under the trading strategies. A lot of these are losing strategies. All right, this stock's a rough one, but let's look at the 2200 and see what it says. It's at a buy, right? And let's see here. So, I mean, if you're looking at this particular trade, you're like, hey, we need price to obviously stay above this 200-day moving average, it looks like, right? So, and if it doesn't, we can obviously see that this signal is about to change. It's literally about to give us a sell signal if price doesn't hold here, right? And it's given us a sell signal in the past before it crossed here, and it's just waiting on a cross here. So you can even set up alerts to say, hey, let me know when that happens. Okay. So a lot of great ways to find trades here. It's not that hard. I guess you just got to know where to look. Well, we try to tell you. Okay. So, like I said, come here to learn and go into the archives. Ton of videos here. Just search for whatever you need. Also, site education will help you navigate the website here. So, and also videos here. Okay. So if you got any questions, drop in the comments. I'll be using these videos to make content for you all to teach you how to use these things. Because I teach people, but I'm also learning. And then I put that into action. And I'm actually pretty proud of myself because we have now learned how to successfully trade or sell options instead of buy them. Okay. So we're about to get to the bag. Okay. I appreciate y'all. Drop your questions in the comment, hit that like button, get your boy subscribed, and make sure you tune in for the next one. We're going to end this